Let's talk money. I've got my Black Wall Street journalist. She's a former investment banker who left corporate America to found Kids Who Bank, an organization that teaches financial literacy to children in 137 schools nationwide. Say hello to the amazing Jatali B. Cheers, Jatali.
Cheers,
See,
Makia.
I beat you
I
at it.
can't take you.
So, what's
Now, if you
up?
start talking about tea and crumpet, I'm done.
I'm just saying, okay, that'll be next week. I've just finished my crumpets and tea.
Mm. So, woman, today we're talking about real estate. Are
Mm.
you ready for this conversation?
I've had a few email me or hit me up on Facebook like, when is she gonna talk about real estate? So there you have it, people listening.
Awesome. I'm excited. That's good because let me tell you something. From tax benefits, like you can borrow against real estate equity to make investments, or you know, basic needs. You can use your basic needs and expenses and use that to generate taxable income from rental properties, which can be deducted, or doing a 1031 exchange, which all in real estate equate to you basically having less tax taken out of your money, out of your profit.
Hmm.
Um, things of that nature. I'm very big in real estate because I just see multiple ways that you can keep your profit in your pocket and not necessarily have to pay taxes on it. If you do pay taxes, pay little to none taxes on it. Not to just forget that the next thing I love about real estate is that there's just so many different compartments. Like imagine you only need about $1,000 depending your situation to qualify you to purchase a property, even if it's an investment property.
What do you know about this Tulsa real estate fund? I've been hearing a lot about it.
So the Tulsa Fund, so basically it's kind of like a crowdfunding in a sense, but it's a little bit interesting because one of the things I was going to talk about as far as topics like parts, compartments for real estate is crowdfunding. Tulsa would kind of go into that category where communities of people have, pool their money together. Tulsa specifically didn't tell people what they were investing their money in. It was kind of like buying stocks in real estate, almost like a REIT. And basically, do you know what a REIT is?
Not at all.
It's a real estate investment trust where people, and there are corporations that already do it, where you basically invest in the trust funds and the companies, like basically buying stocks in real estate, and then you get like sometimes an 11% return, things of that nature. So you're not basically buying the property itself, you're more purchasing stocks in the property, which is one way of investing in real estate without personally purchasing real estate.
So I'm not clear because the brother behind this, his name again is
Jay
Jay
Morrison.
Morrison. He just got married last week, and I did read that.
Hmm.
Um, so, and there are lots of people, even celebrities, people who we had on this show who have invested in this real estate fund. So what is Jay Morrison doing with that money?
So Jay Morrison, what he's doing with Tulsa is basically he rallied up the people. He said we should do cooperative. People of color should pool their money together to purchase properties. He didn't tell them what they were investing in, what aspect of the real estate market they were investing in. He just basically told them, invest $500, a starting base at $500. And from there, eventually, after X, Y, and Z time, I'll let you know what you're investing your money in. Which eventually, when he did do his press release, he said that they're going to be purchasing neighborhoods in Atlanta and other parts, like three main neighborhoods, I think one in Jersey. And they're going to purchase the whole neighborhood and they're going to build up the property. And then within a year, people can choose to take the profit out or keep their money in and allow it to supposedly grow. A lot of people in the Black community have been waiting for this to happen because crowdfunding has been happening in Jewish and other communities forever.
Hmm.
Just in the neighborhood that I live in, there are a lot of Indian families, and you'll notice 3 to 5 families on average living in one home so they can pull money and bank up, right? And then that's a perpetual cycle. You'll notice that in the Jewish community, I knew someone who basically him and 10 other friends pooled $10,000 each, and they purchased a commercial building, a commercial property for $100,000 down deposit. But this is something that he was saying this continually happens, where in their communities they'll pull their money together to buy buildings. So I think the Black community has been waiting for that to happen, have been waiting for this kind of an option to put something in and see a group, cooperative kind of, so to speak. So I really hope it works out. I
Are you
really do.
are you invested in this Tulsa Real
I
Estate
did
Fund?
500. I mean, I did 500. I didn't want to do more than that. I don't have, I don't really have, they don't have a track history, you know what I mean? And in the end of the day, Jay Morrison's history, because he did come from, he has like that whole started from the bottom, now I'm here type,
Yeah.
story.
Mm-hmm.
There are certain things that politically I'll notice that I'm like, what is the game that he's playing? When it's stocks and it's publicly traded, I feel like the government will more back you and your money is more protected. So I'm like, okay, if it's a small investment, I'm not too afraid. But anything more than 500, I would be a little bit more hesitant. Personally, he doesn't have a track history of doing this on a public level yet. For me, Tulsa is new. And sometimes people jump on a new wagon, and if you have more money you can do that. But I noticed that even a few famous celebrities who came forward would say that they only donated 5 or 10,000. So I'm like,
Mm-hmm.
if I know you're
Mm-hmm.
supposedly worth millions and you only did 10,000 or did 5,000,
You're testing it
that as
out.
well,
Mm-hmm.
I'm testing it out as well as you're testing it out. Besides Tulsa, if people were interested in crowdfunding, there's other organizations like Realty Shares and Fundrise, which have been around for a while. And I kind of like their structure in a sense that you can choose what you're investing in cooperative. So if you want to pool your money to purchase a property, you can choose that I want to purchase a real estate, residential or commercial property. So with Tulsa, the one thing I noticed is that people didn't know what they were investing their money in. But when you looked at Realty Shares and Fundrise, other organizations where people can pull their money and invest in real estate, you knew in advance you could choose to invest in commercial property or a residential property. You knew in advance what you were investing your money in. So that's one of the things that if people are interested, their returns are about 11%, sometimes more, sometimes less. But those are two other websites in company organizations that have been up and established that you can check out.
I mean, I
Um,
what I do like about Tulsa, I'm looking is it's a black owned company,
I like that
and
too.
on their website, people can invest after June 1st until they reach the maximum of the $50 million in capital until that's raised.
Mhm.
It's like, they break it down. When will I receive my first dividend? They'll implement, this should be considered a long term investment vehicle.
Sometimes a company or an organization will tell you that you have one full year before you can pull out your money that you
Mm,
put in or any profit. So like let's say right now you put in 500 and your 500 is worth $700. 3 months from now, you wouldn't be able to pull that out and that interest out until a year from now, until the year from the time in which you invested.
mm-hmm, mm-hmm.
So, which is a strategy for them to ensure that the money that they're purchasing properties and all the money's in the pot so they can accomplish their mission. Um, so, a lot of people who have invested into Tulsa will not know until from about a year from now if
Interesting.
this is going to be a lucrative situation for them, if there will be issues. I will say that one of the things that had made investors hesitant or have concern is that when they schedule their meetings, because they've scheduled some phone conferences to kind of reassure people, let them know what they're doing and who Jay Morrison is, and kind of poke at the naysayers saying, calm people down. Those calls and conversation have not been really calming because there's a lack of the organizational aspect to that, which is what you'll notice in a new fund like this. So it's a 50-50 situation. I'm excited to see what they're doing as people of color. And I did a little something too, but then there's still organizationally some things that need to be restructured or just kind of taken to that next level because now, especially as an organization of color, people are watching you.
Right.
In addition to Tulsa Real Estate Fund and other crowdfunding, four other ways that people can invest in real estate are Airbnb. You can invest in home construction companies because with the population increases, home builders are really booming right now. You can be a property manager, which is something that people in real estate market forget about. And then you can also, I mentioned REITs earlier, but then you can also do pre-foreclosures, short sales, probates, rehabs. Right now, there are a lot of pre-foreclosures, people who are losing their properties that you can come in and kind of be their savior, but also make that money and purchase properties for less than that they're worth.
Can you name some
So,
websites where people can get information?
so if you Google ACRIS Gov, ACRIS Gov, Gov, normally for your city and state, it'll pop up. So for like New York City, it'll automatically bring you to the nyc.gov section of ACRIS, where you can see every property's document search by property name, the block. You could look up a whole block's neighborhoods, what the properties are worth, valuations, and things of that nature. Property deeds, which are all important, will let you know who might be in pre-foreclosure, who owns more of their home, and things of that nature. There's so many more ways we can invest in real estate that I would really want you guys to like just think about. But as I said before, if you're even if you're doing like, you don't need $100,000 to invest in real estate. With as little as $1,000 to $3,000, I want everyone to understand that the real estate market is something that you can tap into.
Okay.
And if you already have something and you just want to make money off of that and capitalize, Airbnb is one of the best options right now while that's up.
But with Airbnb, there's some pushback in New York City against Airbnb. So for those that might want to invest and they're in a city like New York where there's a lot of debates, always on the news, what can they do?
Okay, so yeah, that's what I was saying. That's one of those markets that while it's up and available, then abuse of it. Especially the Airbnb market is one that might not be up for that much longer in New York City. But in other states, it's not like California, for instance, is not really getting as much of a kickback. So if you live in a state like of California or one of those states, or like another country, that's something to look at. Especially when you think about, people who own properties in other countries like South Africa, London. Airbnb is one of the main ways that people, even living here in the States, can make money. And it's, to me, very lucrative. So something to look into, something to keep in mind and abuse of until the laws change, and just stay on top of it.
Beautiful. That's the Black Wall Street journalist, Jatali B. Jatali, what's that email where people can reach you?
Info@Kids Who Bank, or my website or my Instagram. Everything is Kids Who Bank.